Well, let's just switch away from tech for a second and focus on Linamar. It's big in auto parts, farm equipment, other engineering areas. It has just signed deals with the federal Ontario governments that will see the company and the two levels of government invest a combined $1.1 billion in automotive technology. We're joined now by Jamie Murray, Portfolio Manager and Head of Research at the Murray Wealth Group. Great to see you, Jamie. Thanks for joining us.
Thanks for having me on.
This is a stock you like, and it's getting support here for new investment.
Yeah, Linamar is, we think, one of the Canadian darlings in the industrial and manufacturing space. They recently hit $10 billion in sales, and we're not surprised to see them working with the federal and provincial governments. They're a huge employer in Southern Ontario and a leader in terms of reinvesting in a space that's been really hollowed out over the last 20 years.
Maybe we could put up a 5-year chart for Linamar. They did invest heavily in EV technology like other auto parts makers, and the EV growth has been slower than expected, and I think that has given some investors misgivings.
Yeah, for sure. So, I mean, I think you can see over the 5-year chart, it's really been range-bound over that time period. Even if you go back another 5 years before that, it hasn't moved too much between that $40 and $80 level. But interestingly enough, over the last 10 years, the invested capital in the company has tripled. So they have 3 times the amount of assets. There's been no dilution. They're actually buying back stock right now. So this is a company we think has just faced headwind after headwind in terms of COVID, slowdowns in terms of supply chain issues, tariffs, inflation. And you know, at some point, markets will normalize. We think their profitability will shine through, and the stock will move much higher.
That's interesting. So you're saying over the years the company has grown, but investors just haven't given them credit for that.
Yeah, the PE multiple is continually compressed. Their margins are also a little bit depressed right now, given some of these challenges, like the move away from EV back to ICE engines, which ultimately we think will benefit the company in 2025 and 2026. They make the drivetrain for like F-150 trucks, and we think as supply chains improve, there'll be a lot more of those sold. Linamar will have better sales in that product. But certainly the short-term shift away from EV, you build up infrastructure to support this new industry, and then all of a sudden sales don't meet expectations. And you know, thankfully, Linamar does have very flexible manufacturing, so they are able to re-engineer their plants to different projects. But in the short term, that takes time, and the margins are lower during that period.
The tech sell-off yesterday, do you think it could be the end of an era for these AI stocks, or certainly for now? I know they have come back a bit, but it was quite the volume down, especially for the chip names yesterday.
Yeah, so the DeepSeek news, it started to, I don't want to say leak because it's not that type of news, but it started to filter out last week and really took off over the weekend. And we just, you know, I think we and other investors look at it as we're expecting pricing to come down for AI models, for AI to be more efficient in terms of the training and inferencing of AI. And as that happens, you'll have an explosion of use cases and more AI built into devices, softwares, applications globally. I think what's really surprised investors is you're expecting a certain level of efficiency and a certain amount of model growth or inferencing growth. And when you do your forecast, you'll say, okay, we think total GPU demand maybe is going to double or triple this year based on these assumptions. And then DeepSeek comes out and it's, we're not getting a 50% improvement in our model efficiency. We're getting a 90%. And so then we're in a little bit of an air pocket. And I'd liken it to car fuel efficiency. If you were to have a massive amount of fuel efficiency in 1 year, you would certainly see oil demand drop in that next year. But over the long term, as we've seen, when fuel efficiency improves, there's just more and more oil. Like the oil demand continues to grow because it gets more cost effective and expands use.
Right, you're getting more bang for each gallon of gas you burn.
Yeah, exactly. And so we think this is long-term a bullish development for overall AI enablement. And that's why you were talking about Apple and Meta. These companies are going to be able to use AI at a lower cost and serve that to their customers, and that should expand adoption. But if you consider NVIDIA and Broadcom selling the oil to the market, the fuel, they're going to see probably a bit of an air pocket as companies readjust to this new modeling technique.
Capital Power, like other electricity generators, fell yesterday. Now, I always think it's a bit of a stretch. People thought, well, oh, we won't be getting such a rapid build out of server farms, and so the electricity growth won't be as big as people thought. It's coming back a bit today. Whoa, is this a name you own, Capital Power?
Yeah, so Capital Power, it is a name that we've owned it for 5 or 6 years in our income growth fund. So very happy to see how the company's performed over the years. We have been trimming it while the company was out raising money from investors to fund these. So, we've been definitely reducing our position as the stock has been increasing. But certainly we think this has a very solid strategy. And just power demand in general, first off, like we said, this might lead to a shorter term air pocket in some of the growth for data centers and hence power demand. But we think ultimately this still is a long-term story of we're going to have more and more computing, more data centers, more power needs. And let's be honest, the grid in North America, it's just old. It needs more and more reliable sources of power. So the long-term growth we think is still there, but just how Broadcom and NVIDIA maybe might see a slight slowdown in their chip sales, there may be a little bit of an air pocket in the need for power.